Now the Love Dragon. So a Love Dragon, which I did on Tesla, the Love Dragon is similar to a Condor type of thing. So if I put a call credit spread here and I took in a credit, I put a put credit spread here and take in a credit. The hope is that price stays somewhere within here to expiration. This expires worthless. I keep the credit. This expires worthless. I keep the credit. And that way you can play both sides. That's kind of like the idea of the Condor. Or I could buy back these two or buy back one of them. Buy back one of them for a lesser amount than the credit. So if let's just say I got $1 credit for this one, and I got $1 credit for this one, and price started to move here and, threaten my credit spread here. Well, shit, if I could buy it back for $40, I'll buy it back for 40. That means I made $60. This one I let expire and I made $160 on the deal. That's how you normally play condors. But the way I like to do it a lot of times is if price is going to stay within this range, but there's a chance it could work its way up, or there's a chance it could work its way here. One of the things that you can do is you can do an unbalanced fly. An unbalanced fly, for instance, for the call side, it's a call debit spread and 2 call credit spreads. So normally a butterfly is a call debit spread and a call credit spread, right? You buy this one, you sell this one, you sell this one, you buy this one. So you end up with a structure that looks like this. It's one of these and one of these sharing the middle strike. See how I've got 2 of the same strike right there, and then 1 and 1? That's a regular butterfly, and which is fine. But when you do one of these with 2 credit spreads, when you buy it, no, Keys Property, it's the last thing you want to do is take a stock or any kind of asset that has high price volatility and bet a condor. It is the exact opposite. You want to take a stock that does not, and I get what you're saying because it's been doing this, right? But is there a more volatile stock or asset than Bitcoin? Can't Bitcoin just shoot the moon in a heartbeat or tank out of nowhere? So that's not something that you want to take that kind of risk. Now, you could be right this week or tomorrow or Tuesday, but that's not the kind of asset you want to do it on. So the unbalanced fly that I did for the upper side here was 380. I did the what did I do? Let me do it again. I did the 375, 377 half, 380 unbalanced fly, which means I bought 1 call, I sold 3 calls, and I bought 1 call. Can you see how this is 1 debit spread here and, 2 up here. Let me draw it. It's not neat and you won't be able to see it. Do this one more time. You buy this one, sell 3 of these, boom, and you buy 2 of those, 1, 3, 2. So you have 1 debit spread and 2 credit spreads. That's how you end up with 3. And because you've got 3 that you're short, when you go to buy this, you buy the butterfly, because when you put the structure on, because there's 3 short in the middle, you end up getting a credit for it. It's really bizarre. You buy it and they give you money. So this particular one, I got $24 for. I did something similar way down to the downside. So I ended up getting the 342 half put, 340 put, 337 put. Again, 1, 3, 2. And this one, I also got $24 for. So I got $48 in total for these 2 trades. If price stays between 342 and 375, which I believed it would, the whole structure expires worthless and I get to keep the money. However, unlike doing just verticals, what would happen if price dropped down here and finished somewhere inside this net? Well, it works just like a butterfly. Because this is 2.5 wide, I can make up to another $250 on top of the 24, on top of this 24. So 48 plus 250. Conversely, if price moves higher into this net, wow, I could make another $250 on this butterfly. But there is risk. And the risk is that you get above or below your butterfly. And if you do, your risk, just like the vertical, is the width of the spread, which would be 250. 250 risk up here or 250 risk down here. Not and, it's or. Because if price went up here and you were risking 250, price can't come down here simultaneously. So this would expire worthless and you keep the $24. So let's just say that's about what's going to happen. So this particular trade, I managed it today. I didn't want to mess with it, so I decided to manage it. So what I did was, and there's a few ways that you could manage it. One way to manage this is you can just let it expire worthless, right? And if it stays, price stays below 375, which it might tomorrow, the whole thing expires worthless, you keep the $24. However, at some point between now and expiration, if price is somewhere between 380 and 375, you could sell this butterfly probably for a credit on top of the credit you already got here, on top of the credit you already got here. But price got above. Price got to about 381. What was the high on Tesla today? 383. So it got up to 383 today. And because I've got the 375, 377, I didn't want to take a chance, so I decided to manage it. So one of the ways that you can manage this trade is you can, because this is, as I said earlier, this is a debit spread and two credit spreads. Well, what would happen if, since this debit spread's doing quite well, what would happen if I sold the debit, just the debit spread, and broke it apart, right? So I decided to see what could I get for the 375, 377 half. Just one, quantity one. And it turns out $190. So I sold it for $190. And by taking this off at $190, look what I'm taking off here. I take off the 375, right? And one of the 377 halves, which leaves me with two of these, right? Let me go to white. So I end up with two of these now. This one is gone. So what am I left with after I sold the called debit spread portion of the fly and broke apart the fly? What do I have left? Two. Well, they're not 5 wide. They're 2.5 wides. I'm sorry, Michael. Yeah, two and a half wide. Yeah. So I have two 2.5 wide credit spreads left. But I got $190 and I got $24 and I got another $24. So total in my pocket is $238. Now what do I need to do? Well, I don't like this 377.80 because it's in the money. So what could I do? So what did I do? I rolled it. Now, unfortunately, I was not in between strikes in here. Price was at like 382 when I did it. I was on the plane, so I was like, screw it, I'll just roll it. So I rolled it, and because it was in between strikes, it cost me 15 cents. Instead, and had I done it earlier, I probably would have gotten like a $15 credit. Right? So it cost me $15 times 2, because I had 2 of them. So if I subtract that $30, it just cost me, I now have $208 in profit at the moment, and I'm sitting on 2 credit spreads for next Friday at 377 half by 380. So what do I need to have happen? I need Tesla to drop $2.50 by next Friday. If it does, they'll expire worthless. And guess what I made? $208 on a trade that wasn't working. Okay, so that's the Tesla trade.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.